markets also following what the global markets meltdown is being seen this morning. It's all opening in the red, full on consequence of what Donald Trump had said. So let's listen in now to some of the excerpts in the comments by Donald Trump with regard to the tariffs, where we could see another version coming in.
At some point, you're unwilling to tolerate this idea of a Trump put. Is there a threshold?
I think your question is so stupid. I mean, I think it's I don't want anything to go down, but sometimes you have to take medicine to fix something.
So that's what Donald Trump has said, and we are expecting, remember, April 9th is where the next step could be taken on this. There could be higher tariffs. UK, the European Union, Japan will be keenly watching. All right, joining me now, Siddharth Zarabi, our managing editor from Business Today, continues to be with us. Siddharth, tell me this. I believe that crude oil, copper, these are some of the main elements that in the sectors that are being tracked closely. How are we looking at other countries responding to the Trump tariff? Because India hasn't taken the confrontational route that possibly China has.
Okay, let me try and answer that question by giving the example of something that is very popular and many viewers of our show would know, the iPhone. iPhones at the moment are only manufactured in India and China. India has been hit with a 26% tariff. China is 54%. In the run-up to April 2 till 31st March, Apple increased exports from India to the US. But what will happen to iPhone prices in the United States if the two dominant manufacturing countries, China and India, have been hit by such high tariffs? Obviously, prices of iPhones will go up. You could take this an example across products, across sectors, and this is what is at the heart of the matter. The existing manner of exports, goods being traded across the world, the global supply chain is now under question. And what is happening in the Indian market, let's take, for example, the IT sector. The IT sector, the top Indian IT companies get more than half of their business from the United States. If you take a look at IT stocks in this fall have taken the highest hit today in the Indian markets over the last 20-odd minutes, 25 minutes that trade has been open. Why is this? Because obviously if the United States were to slip into recession, the business of IT firms in India will go down. So, Pooja, it's basically one interconnected mess. No one knows what the new economic order will look like. There are reports that 50 countries have reached out to sign an agreement with Trump. Look at the absurdity of the situation. Even the calculation on the basis of which these very high tariffs have come out, that is being put under question by topmost U.S. economists and former policy makers. So it's a big mess. Markets will obviously be hit. And remember, in hours from now, once the U.S. markets open, I think it will be a bloodbath among the likes of which have been seen very rarely in the last 50, 60 years.
Siddharth, India clearly would be banking on our negotiations meanwhile, unlike the retaliatory higher tariff. How do you think that's going along? Because nevertheless, must add here that India's 26% is still lower than a lot of countries, including in Asia. We also have exemptions on certain items.
Well, as far as India is concerned, one of the crucial parts of the strategy is how do we protect our exports. It is estimated, the final numbers have not yet come out, but it is estimated that India's exports in the financial year that closed a few days ago on 31st March were $800 billion or thereabouts. Now, that is extremely commendable. Commerce Minister Piyush Goyal is set to meet with our exporters and traders on Wednesday to discuss the fallout. But, Pooja, what is India's strategy in a nutshell? India's strategy, and I can say this on the basis of off-record briefings, India's strategy has been decided at the highest levels of the government by Prime Minister Narendra Modi himself, which is that we will negotiate, we will talk, we will not talk with our hands behind our back or tied to the wall. That is why proactively over the last 3-4 months, in anticipation of this development, because President Trump had made his agenda clear, in his first term itself, he had begun this trade war, but not to this extent. India has been engaging for trade, not just with the United States, but with multiple other countries. So, diversifying away from the United States, which accounts for a certain component of this $800 billion of exports, engaging with other economies and reducing our protectionist barriers is the key from what we can sense. And I believe over the next weeks and months, many people in government are preparing to seize this development as an opportunity rather than as a challenge.
Siddharth, have you ever seen a situation like this, that collectively the market showing a downturn in this manner, at least in the past few years?
So we are back at the kind of black swan event that the markets globally saw after COVID. And for our viewers, many of whom might be looking at the stock market as an investment option, no recommendations from our side, but many of them would believe in the adage of buying the dip, which means when something which you see value in falls, you go and buy it. But COVID is the time that we should compare with, even if we don't want to go back into history. During COVID time, we saw asset prices fall. Pooja, you spoke about crude oil and some other commodities. I will add real estate and everything else. Asset prices are going to fall if the stock markets fall, because the money which is made in the markets as a surplus usually tends to go into sectors like real estate. So there is likely to be a second round impact if this continues on asset prices, some of the very high valuations we have been seeing in Indian real estate markets. So the effect could pan out across sectors over an extended period of time. The only silver lining is if President Trump decides to change his mind because of the pasting that the U.S. markets have been getting, almost 15% being knocked off. $6.5 trillion have been lost in the U.S. market cap erosion, and that is going to hit a lot of Americans. There have been job losses in America. There have been massive protests of the kind that have rarely been seen in the United States. So the only thing that could change President Trump's stance is Trump himself and what happens in his domestic constituency. I don't think any retaliation from anyone, including China or the EU or any other country, is going to change him even one bit. It's only the U.S. politics and the massive pain, economic pain that his actions have unleashed and will continue to unleash is the factor that may change his
What about
mind.
those who are watching this right now and they are an investor, and how should they go about in the next few hours, next few days while this is happening? Literally a plunge that we witness.
There were market experts on the show just a little while ago when we had cut to Business Today TV, and I heard one of them say, Pooja, that this is perhaps the time to stay on the sidelines. Again, no recommendations, but when there is a crisis, when there is a storm, you are advised to batten down the hatches and stay put. I think that's perhaps the best way to answer your question.
Siddharth Zorabi, thank you very much for now. He's tracking all the latest coming in when it comes to the markets. This is unprecedented in so many ways, and that's why we are staying on this big story.